in the east of the continent, Uganda's private sector business conditions improved to 53.7 from 51.9 in July, while Kenya's deteriorated to 43.1 during the same period. Coming back to Southern Africa, Mozambique's PMI remained in positive territory, down slightly from 51 to 50.6 in July. Ridle Markus, Sub-Saharan African macroeconomist at Absa CIB, joins us now with greater perspective on these PMI figures. Ridle, thank you for your time and good afternoon.
Good afternoon.
All right, Ridle, maybe we can start off by reflecting on the trends that we're seeing throughout the continent. We are actually seeing some decent PMI numbers in some regions and dismal, very uneven in some, uneven picture completely.
Absolutely. I think it's a little bit of a mixed picture emerging. But at the same time, I think we should not be surprised to see conditions deteriorating in markets such as Ghana, at least Nigeria, Kenya, and Zambia. We had the issues around drought in Zambia, so no surprises there that conditions are still very difficult there. We had the protests in Kenya, which is behind the weaker demand conditions there. And then, of course, in Nigeria, we've got elevated inflation still, impacting adversely on economic activity. Now, I mentioned Ghana by accident earlier, but Ghana is one of the countries that we've just seen broadly stable conditions emerging. But they too, if you look at the report, you'll see that they too are suffering from increased inflationary pressures because of the weaker currency. The cedi has depreciated over 20% or 22% against the US dollar so far this year. So conditions are very stable at this point in Ghana, but there is a risk that it could potentially deteriorate depending on a whole number of factors, including the development of the exchange rate. So not great news for markets such as Nigeria, Zambia, and Kenya. I suppose Uganda is one that stands out. It's not a perfect story, but there's a lot of infrastructure investment. The economy is booming. It's likely to grow well over 5% this year. So it's probably the shining light amongst the markets where the survey is being done.
I want to speak a little bit more about Uganda. Like you're saying, quite a few green shoots. It's not the perfect picture here. It's an economy we actually don't hear about often, Ridle. Let's talk about, maybe what's catalyzing the infrastructure development and also contributing to very strong growth forecasts.
Well, the economy has always had a strong focus on infrastructure development, but in the most recent years, the focus has been around the development of the energy sector or the Uganda's oil story. So they are building the East Africa oil pipeline to Tanzania, all kinds of infrastructure, processing facilities, etc., storage facilities being built around the facilities at the Telenga and Kingfisher fields. And Uganda, of course, hopes to pump oil, commercial oil, sometime in 2025, most likely in 2026. The government also recently announced a 15-year development program. And then we know that they are co-hosting the 2027 African Nations Cup. So a lot of infrastructure that need to be built. So a strong focus on infrastructure development in Uganda, and government has really increased its expenditures massively in the current fiscal year to accommodate that. So that, in addition to very modest inflation, etc., it is really driving that economy, while it's also got a very strong agriculture sector. So quite a few developments are very positive for Uganda, which is probably going to support the growth of between 5.5% to 6.5% over the next 2 or 3 years.
Now you mentioned, of course, a currency risk as something that is affecting some of the countries that we've mentioned today. How does currency risk play into Uganda's story, if at all?
It does. So earlier this year, we saw the central bank hiking the policy rate. I think it was 50 basis points because it was scared about the potential weakness of the currency. We know that Uganda has last year passed the Anti-Homosexuality Act, and that has alienated, multilaterals such as the World Bank. We also saw the US kick Uganda out since the beginning of this year out of AGOA. And I suppose there's a bit of uncertainty around these external financing constraints brought about by the passing of that bill. So that, of course, is a challenge. However, since the first quarter of the year, things have stabilized in the country. The currency has stabilized beyond expectations. There were not the kind of outflows, I suppose, that the central bank has expected. So in the most recent meeting last week, they cut the policy rate by 50 basis points. They turned much more upbeat around the inflation story. And then they also said, that I suppose the overall outlook for the economy is fairly strong. So, there's been some surprisingly positive developments. And as I said earlier, the fact that the agriculture story is very strong in Uganda as well also helps with that story.
And then let's talk about Kenya, because of course you've mentioned some of the issues facing Kenya right now. My thing about Kenya at this point is, Ridle, there's so much instability in terms, I think, with government. And I'm wondering what that is doing to, of course, overall confidence, and if that's also playing into what we're seeing happening in the private sector, and just how much energy and execution it's going to take to turn the story around. Because, of course, we know that, Kenya actually has a lot of potential.
Oh, Kenya is for sure a very solid story, has always been. It's, the largest economy in East Africa. Productivity is very high in that market. Agriculture sector is very strong, depending on weather conditions, of course. So it's got a lot of good, going for their country. It's also got a strong oil story, although they're lagging behind Uganda in terms of developing it. However, as you mentioned earlier, there's some questions around government's management of the economy. We've seen President Ruto dissolving his cabinet earlier this last month, following these protests because of the revenue raising measures that they were attempting to push through. We saw subsequently that the finance bill was pulled. So, and he has now, in the past couple of weeks, put new people in place in key positions. So he's starting to put a new team together. The question is just whether this new team can actually deliver. Lots of questions around fiscal sustainability still. The Finance Act was meant to address that, but because it was pulled because of the protests and elevated living costs, we're now sitting with new challenges. How much does the country have to borrow? We know that the multilaterals are fully behind Kenya, but there's still some questions around raising revenues going forward. Rating agencies, at least Moody's and Fitch, have downgraded Kenya in recent weeks, and we're waiting to see what S&P is going to do on the 23rd of August. So conditions are not very positive. As I said, we need to see how the government is going to take on this new challenge by continuing with fiscal consolidation at a time when they can't really afford to increase taxes. So they have to cut expenditures quite drastically. So not an easy period for Kenya. And there's going to be a lot of backwards and forwards in terms of policy, I suppose. But generally, we remain fairly upbeat on Kenya's longer-term prospects. And it's one of the countries that we continue to see expanding at a rate of 5 to 5.5% in coming years, despite some of the difficulties I've just mentioned.
Right, that's all we have time for today. Thank you for taking us through these very interesting economies this afternoon. That was Absa CIB, Sub-Saharan Africa Macroeconomist. That's Ridle Markus.